Good afternoon, everyone. Let me share my screens with you in the essentials room. Cool. And I want to show you what we're doing in the chart patterns mastery. Basically, we're watching the banks. So one of the keys is to watch what made markets go up or down. So what made markets go up or down is definitely the bond market, which is now sold off somewhat on the upper left, and the banks. Yeah, the banks sold off. So that's one thing. The other thing, and you have historical, though this day is relatively strong. So you have a lot of differing things in here. So you just try to play little things. So the little things we're playing. Now, we didn't do the ES, we did the SPY. But I'm telling you, this ATR trailing stop works like a charm. Look at that. So you see where the trend is down. Now, you might say, well, how do you know that's not going to go to a new high? Well, that's true, but it gets overbought. So it's all on how it works off the overbought. But it worked. It worked fine because while this was going down, also the banks were going down. So that had a lot to do with it. So that's number one. Number two, I thought I'd go over some historical trends. I definitely want to show you tells, but I also want to show you some historical trends. So what I mean by that, give me 1 second. So one of the biggest things I see, is this Pitbull low. Now, let me just tell you that when I've seen this Pitbull low, it works. I mean, don't get me wrong, it works at times, but I'm talking about day trades. So historical does matter. I'm not poo-pooing that whatsoever. So, but I'm just telling you also that I wanted to show you what a Pitbull low is. And if I'm going to play on historical tendencies, then I have to take my quick profits on things like that. And that's why you have to respect this ATR trailing stop. Doesn't mean you can't make money on the downside, especially when I have reasons, but you got to be aware of it. So I thought I'd show you what the Pitbull low is. Now, this is from Mr. Top Step, but it all has to do with the S&P tends to make a low on Thursday or Friday the week before expiration. It also works especially well when it's prior to Martin Luther King Day. So that doesn't mean to blindly buy. It also means that in a bull market, heck yeah, the lows are going to be lower on Thursday and Friday than the next week. So that's a little bit of a misnomer. But I thought we'd go back a number of them because maybe that can help you percentage-wise have a better trading benefit. So let's go into it, and I'll show you what we're talking about. So we're going to go in to the Pitbull low, but we're going to take the SPX. We're going to take the third Friday of the month. I want to be sure I'm doing this right. Yeah. All right. We're going to take the third Friday of the month, and we're going to see on an hourly chart what the markets do. So as you see in here, there was a time and place to play it on the short side. Yeah, we're out. Yeah, time and place. Just keep that in mind. And we made money in that. We made money in XBI. We made money in JP Morgan. I'll go over JP Morgan pre-market in the charts later in this episode. So the first thing I want to show you, though, was that Pitbull low stuff. So many ask, and it's a great question because historical stuff does matter at times because so many funds are watching it. It becomes a self-fulfilling prophecy. So let's go into the third Friday of the month. Like here's October 21st. So we want to go to Monday the 17th. This October. Now, keep in mind something that's really interesting in here is this was a big old downtrend. But what happened in there? Well, let's go see. So we're going to go, it's still pre-buffering on the upper left. So we're going to October 17th, a Monday, and we're going to go and see what it did on Thursday and Friday. There you go. The low was Thursday. But what do you notice? There was money to be made on the short side too. Net, it came out ahead. But there was money to be made on the downside too. So let's go. Now, keep in mind, that's with the overall unchanged market. Let's go to October. Now, October was down. Let's go to the 16th. The 20th is normal expiration. Well, you could call that a Pitbull low. I don't know about that. That's a little bit of a hindsight for me. The key is I never buy on a Pitbull low. If I find a short opportunity, though, I have to take a quick profit. I have to respect historical tendencies. Let's go. Now, keep in mind, the end of last year from like October 30th, the market exploded. So, sure, the tendencies is the following Monday is going to be higher than the Thursday and Friday before. But let's just do it anyway. November 13th. Yeah, there you go. Yeah, you're already in an uptrend. So it worked. So you had to sell off. The bottom was Thursday night. So how about, like I said, if you're in an uptrend, it's more likely to work. That's why I don't use it that much. Because if you're in an uptrend, it's going to be higher. December. How about that? I don't know about you. It never looked bad. So let's go. Let's do this. Let's go to this. Okay, we're going to go to January 17th, 2022. That's Martin Luther King Day. So there's 2023. Obviously, there's a number of them. But we're going to go to 2022. We're going to see if the historical tendencies of not only this Pitbull low, but also Martin Luther King Day. Just because a lot of 3-day weekends markets go up. So there's your January 17th. Let's go to Friday the 14th. What'd the markets do? They went down. That's what I'm telling you. You can't just blindly go on that. Sure, the market got nailed and rallied right near the close. So that one didn't work. Let's try 23. All I'm telling you is I don't like going on historical other than taking quick profits. Okay, we're going to go. The 16th is there. Let's go to the 13th. Well, that one worked. So that one, you had a little sell-off. I wouldn't say a lot. Now, the bigger thing, I just showed you 2022 and 2023. What was the broad market doing on a daily chart? That always, to me, is a bigger deal. Well, this was turning, sort of. Yeah. All right, how about the year before? As you see, it just seems variable to me. Not much. More of the story, I just wouldn't go on historical. I would look, especially on expiration day, I would just look for definable patterns. That's all I do is look for definable patterns. And it's been working. So just to let you know. So let me show you what we're talking about with definable patterns. So the first thing is, if you're in the chart patterns mastery, you know I've been obsessing about the 20 moving average. So not always. So there's a convergence and a divergence. A convergence is when multiple indexes get over their 20 moving average at the same time. This doesn't mean to buy. It just means there's no divergences. But now look at it. The Dow Jones transports are decisively under it. The S&P is decisively over it. So on the left, how about the Russell? The Russell's decisively under it. How about the bond market? Bond market's under it. So it doesn't mean that these that are over it have to go down, but what it means to me is the probability is they're not going to go up. So just that's number one. Number two, when I see this on the left and I see the YM down 200 balloons and I see it about to get under here, and you see there was an indecision candle. That's a doji right here. And then the follow through so far to the downside. The first thing I do is it doesn't mean to blindly short on the right, but it means to look for reversal patterns. So you have this on the left starting to break. So you have the Russell under here. You have the transports way under here. So on the S&P, I'm going to look for reversal patterns. There you go. So we can even put that on a 1 minute. So the point of the story is that when this was getting nailed on the left, these little bear flags on the right were more likely to work. In fact, while this was going down, if this had a rally, that bull flag is less likely to work. So that's what I mean. That's why I'm not messing around with this Pitbull low stuff. But if we want to buy it cover in here, sure. But the probability is that this is going to break down if these are breaking down. So it's all about probability in the long run. Done it 42 years. It's just like the house. Even if I have a 3% edge, a 3% edge over 40 years is pretty good. But we have more than that. But I'm just saying, theoretically, you want the probability on your side. So you see that right there. Now, keep in mind that when I show you that, if this was going straight up, there's no way I play that to the downside. Just want to make that clear. Now, this is going to be the one I'm real interested in, is the NASDAQ. The reason being is the NASDAQ on a daily chart is way above the 50. I'll go and try to copy this image for you. I don't know if this will work. I can't get it to work on the YouTube live, but I can here. So here you go. There. Now, just let you know, I posted this earlier at the earlier. So just keep that in mind that I was showing this. So the beauty, and I showed this earlier, is that you can press an arrow. And I could put this on a 5 minutes. I can't do it on when it's something I've published. But the point is that if this stays decisively under here, it's not decisive yet, then the probability is this is going probably to 47.80, another 25 points down. So just, I put that up there. It's on TradingView. Go and press the arrow. It's pretty cool. So the next thing, NASDAQ. So that's what I'm watching now. I'm watching that indecision candle, just like the Dow Jones had an indecision. And you see what happens. This is what I call the point of no return. If this breaks that bear flag, then this is much more likely to follow through to the downside, not the upside. That's how I look at it. Now, we were long XBI. When I saw the Russell going down, we exited the XBI. So it's almost down. So what was our theory of why we got out of the XBI? We were playing this. We were playing if it got over this, it was going to fill that gap. When it went here, we got out. And now it's back to here. That's a beautiful thing for us. So I'm just telling you, chart patterns, objectives, and then combine that with the divergences. So when I saw the banks go down, it was more likely these are going to go down, which meant that I needed to exit the XBI, which is what we did. Thank goodness. So that's where we are. Second thing, and I thought this would be a great learning thing for you, saying that we have a lot of earnings coming out. So the first thing I want you to see is this. When good earnings come out on a stock that's already factoring in good earnings, they usually sell off. Look at that. Now, they don't blindly sell off. You got to wait for the cross on a 1 minute. That's how we play earnings. Yeah, you see it. Now, you might say, yeah, but you missed 2 points. Yeah, but right here, you didn't know if it was going to 190. There, look at that. That's only about 4 points. Now, there's another way to play it. Really cool way to play this. And that is on the right, put the pre-market. A lot of times with earnings, pre-market or post-market, those charts can really help you. Really, really help you. And there you go. Yep, there's your rectangle. You don't play it on the way up, but the second it broke that ATR trailing stop on the left, it also broke the rectangle on the right, and that was it. So if you didn't play this, you got that rally to the underside, and that was a layup. And then you got a bear flag here. This is called a Brecher ledge when you can connect a horizontal line. And then you had a bear flag within a Brecher ledge, a prior move down, a horizontal consolidation. So all day, it's been a great sale on that kind of stuff. Now, without even looking, I bet the SPX is down like 7. This is on the low. Why on earth would the ES be up? Yeah, down 7. So just keep that in mind of what traders are looking at. Right now, the traders are looking at the banks for direction for today. Now, you might say the dollar, and I always poo-pooed that, but that's working pretty well. Pretty well. On the other hand, yeah, it's working pretty well. So in there, it's working okay. About dollar rallies, markets go down. Now, it's not exactly right, but it's a good trend. So it's a good trend. In fact, on here, well, I'll show you on how to do a share grid that's a little different. So you have a home screen, you see green. That means Thinkorswim. If it's blue, it's Schwab. Most subscribers and most people have only Schwab. I have both. I have 8 million chart grids on Thinkorswim. I've had it for years. So what I'm going to do is this. I'm going to share the grid. It's not going to work today, but I'll show you on how it will work. There. So the way it works in there is you go to Notepad. And like I said, I can't share this on the free one. This is one reason to join the Essentials room. But all you do is you go to a Notepad and you copy and paste what I just showed you. And then put it in the following day on Schwab. That's the way to do it, just to let you know. So I posted in there for you and in the Essentials room only, but it's a good one. Now, the next thing, what now do you do? Well, heck, the ES and the NASDAQ sure look like bear flags to me. And the things that made the markets go up are going down. That's exactly why you don't just look at a Pitbull low. Now, obviously, if this is down 50 and then bounces, everybody's going to say it's a Pitbull low. I don't care about that. I care about day trading and how to take advantage of it. And so far, so good. So just keep that in mind. Tesla not going near. Over here, not going near anything other than if the Russell doesn't rally and the transports don't rally and the Dow doesn't rally. To me, the probability is the NASDAQ's going to have another leg down. In fact, the probability is that the NASDAQ bear flag is going to break. All about probability. There you go. Now, it might not. I'm just telling you probability-wise. So that's what I'm watching. The other thing, and it's extremely important, why did these bear flags work? because of lack of support till here. So if this bear flag plows under there, then this is more likely to break. But at the moment, it's at somewhat support. So those are all the factors I'm looking at. And that's where I am. I will tell you, the bond market helped the stock market go up earlier. I'll show you what I'm talking about. Look at a same thing, 20-minute chart, 20 SMA. And if you go and put the daily up here on the left, everybody thought the bond market was safe, that the bond market was going to invalidate that bear flag. So when the bond market started going down, not up, and already the banks were going down, already the transports were going down, really the only thing holding up markets was the bond market. So if the bond market sells off, it was more likely the ES was going to sell off. The problem with everything now, like I said, is you got that right there. So for now, you just sit back and wait till the last hour, even though these do look like bear flags, no doubt about it. And that's where I am right now, just being quiet in here. Just keep that in mind, just being quiet, watching that this is more likely to break down than up. Russell going down, transport still going down. This bear flag is more likely to break to the downside. Just keep that in mind, which is what's happening. And that's where I am right now. I'm watching the possible bear flag. What would make me not think that's a bear flag? Just because of the support, and if all these suckers turn green, which means just underlying strength. I don't see it at the moment. Doesn't mean you have to short, but it doesn't matter. The probability is I'm not buying dips. So just keep that in mind. And that's where I am. Like I said, this looks real ominous to me. Now, I would love to go in and sell like the Apple 180. Well, you can't. They're too cheap of selling like premium for today in the direction I think the market's going. The problem is usually at about noon, the premium's already sort of dead. So I'm not doing it. Do I want to buy puts? Well, I might. I might want to look at the Google 143 puts. I might look at Meta. Amazon, I'd rather do the 155 calls of selling them. We're doing a lot more call premium selling this year. It's working. You're using time to your advantage. So keep in mind that if you sell premium in JP Morgan and you sell, let's say, the 177 and a halves at 70 cents right here, well, number one, it's got to go to 178 and a half just to break even and not lose money. I would rather sell the 175 calls naked right here, even though they're the same price as the 177 and a half, but the direction is known. When you sell premium, all you care about is a lack of momentum opposite the way you want it to go. So once it broke the ATR trailing stop, it lacked the momentum to go up. So it was probably going to go up a lot slower than it did here. So here I messed up. Yeah, good news. We sold the 175 calls naked, but we sold the wrong. Well, I'll show you. But unfortunately, I sold the wrong one. We still made money. Don't get me wrong. So we sold the 177 and a half calls at 72 cents. I made a mistake. I wanted to do it for this week. We bought them back at 60 cents. It's still 20%. But you had time on your side. That's the whole point. When I was on the floor, mainly we sold premium to establish a position, not just to blindly sell premium. If I see a bear flag, I'd much rather sell calls than buy puts in a stock that doesn't have news. It's already had news. Citigroup already had news. Apple, they have an announcement on the patent suit today about the iWatch. I'm not going near that. That's why you got to know, that's what Simpler's for, is to know when news is coming out. I'm not going near this. Now, do I want to go near the 185 puts for today, just in case they have a bad ruling? Well, not at 20 cents. If this is 185.11 with 20 minutes to go, heck yeah, I might try to buy those at 5 cents. But right now, it's got to go down 80 cents just to break even. Too little of an edge. So just to let you know, at least that's how I'm doing it. And like I said, the link comes up broken for Thinkorswim. That's what I was saying. So you have to put it on a notepad and then copy and paste it on a notepad. And then you do the link on Monday. It's a day lag or Tuesday. So it's not going to work when I do it on Schwab. You got to put it on a notepad, and then you have to then copy and paste it the following day. So just keep that in mind. So if you go in here, I'll show it again. Well, you just put it on a notepad, copy and paste, and then you add it the following day. So I'm doing it on Thinkorswim, and then you transfer it to Schwab the following day on your notepad. So that's the way to do it. So here's your share link. Right there. There. Just transfer to Schwab in one day. So that's on Thinkorswim because I have 8 million things on Thinkorswim and grids. So just take that and then do it open shared item the following day. And like I said, that's what I do. So if it's broke, I don't understand why. It's a pain in the rump of doing them both ways, but I just do them the following day. So getting back to it in here, I haven't even looked, but I'm telling you, all you got to do is, where's the Russell? Russell on the low. I don't even have it up here. What's the probability of the ES breaking down? That went up dramatically. ES, survey says, oh, there you go. Sort of breaking down. The only thing saving this, the only thing is the support right there. That's it. If that doesn't hold, you're talking about it going to here. Another 7 points. Path of least support, that gap. Doesn't mean things have to fill the gap, but if you have a bear flag, the path of least support is right here. Then what happens? Well, let's go into here. There's your S&P 500. On the right, you got the Dow. Now you see what I see. Now you got this as a correlation. You got that. You got that. Then on the right, you have this, which has already been violated. And you have that. That's our day trading way to play. So if the Dow Jones has broken that, now how about the NASDAQ? NASDAQ is right at it, which to me means the probability is that this is going to here. Because this is already there. This is right here, which is equivalent to that. The daily charts look similar. They're both over their 20 moving average. There. Both over it, even though a lot of other indexes are under it. Now, the problem right now is it's lunchtime. This is at support. This is near support. To me, the probability was here. That was your play. That was your play. Now it's just, I'd love to see it futz around here for another hour. So it's just not there at the moment. So especially with like the NASDAQ oversold. For next week, yeah, if this YM decisively gets under here, so you see that 20 moving average, then the probability is this is going to at least probably 100 points lower. So that's what I'm watching. And like I said, you can respect any kind of Pitbull low if you want. But if the things that made the market go up earlier, the bond market, the Russell was up. It was up 27 points, even more. If those are going down, then the probability is these are not going up. Now, you don't have to play them right now, but I'm just telling you, at least that's what I see. And what that means to me doesn't mean you have to go crazy shorting the market, but I'm sure as hell not buying it. Let me just put it that way. And also, a lot ask me, what's your favorite correlation over 40 years? It changes all the time. So if I see the transports diverge from the Dow Jones, or the transports diverge from the NASDAQ, well, then the transports are my tell at the moment. If I watch the bond market correlate beautifully with the Dow, and then the bond market break decisively, then the bond markets are my correlation. So the correlations change all the time. That's why it's creative to know which this moving average is working pretty well, of which are under it and which are over it. So even if I like the XBI and it did the inverse head and shoulders today, if I'm watching other things fail to reclaim, then I'm going to exit my XBI, which is what we did, and it's down for the day. So just keep that in mind. We already took our profits. In fact, we took our profits in everything. Thank goodness. And see, this is the real problem when you're day trading. Do you key off the dollar? Well, the dollar just went to a high. This could be a bear flag, but they're at support. When I see this kind of divergence, darn right, I'm not buying, but I'm not shorting at the moment because of the time of day. And also financial reasons. We already had a good day. There's no reason to screw it up. And Soaring Eagle, now you have me. All right, let's try it again. We're going to try that link again. You're trying to do it on Thinkorswim. There. All right, let me try it on Schwab. Let's see if I have one. Yeah, here you go. That's a little different because I have advanced decline. That's Schwab in the blue. So let me share that one. Maybe one of them will work. There. So I'm hoping one of those will work. Now, I think you see the writing on the wall later. And like I said, let me know if any of those share links work. Well, those aren't simpler indicators. Those are my indicators. I don't know about the other ones. All the other indicators, you'll have to ask support about that. I'm just talking about the simplistic, like red and green and stuff like that. But I don't know about the others. I'm sure they do. I just don't know the links for them. So I'm sorry. Well, I do know that if you do something, let's say on Thinkorswim, and you share it to yourself, so you have the green Thinkorswim, and share it to yourself and put it on the on a notepad it will work with Schwab the following day. So for some odd reason, I'm allowed to have two different platforms. Probably because I've had Schwab forever also. So just share it here, and then put it on Notepad. It'll probably work the following day. At least that's how it looks to me. Well, Soaring Eagle, I figure if I show you enough of them, eventually one of them will work. So, sort of like trading. If I show you 100 ideas, I'm sure one will work, especially if I do one against the other. So if I buy the ES in one account and sell in one, I guarantee you I'll make on one of them. So no, all kidding aside, I'm glad it worked for you. So now you put it on Thinkorswim. If you have Schwab, just put what worked, put it on a notepad, and then transfer it to Schwab the following day. That's what I do. As you see, it stopped at support. Everything stopped at support. It's amazing that support and resistance. Has anything changed? No. This is just all bouncing against support. That's all I see. No, I have no idea what to expect end today. That's the biggest, now, not you, but me, about the biggest way to make a mistake is to have an opinion by the end of the day on expiration day. I have no idea today. especially like I showed on the day before Martin Luther King. I have no idea at the moment. I do know that next week, if the transports have another leg down and the bonds have another leg down and the Russell has another leg down, then I'm going to play to the downside. Now, not everything we do are day trades. XBI, we've been in for a day and a half. Good trade. The rest of them we did today were day trades, but I am not sure what to do at the end of the day. Just to let you know, IBM. Let's look at IBM. I'm sorry if I didn't answer your question earlier, Mike. Let me look. Now, IBM is a classic one to short premium because you're not going to have a takeover in there. Do you short premium now? Heck no, not when it has that good a chart. If anything, you look to sell puts. And stock looks great. Now, here's another one. And Mike, this is a great example, I think. Well, I say it's a great example because I'm partial. But we're seeing a lot of stocks that rally near their yearly high into earnings. No matter how good the earnings are, they sell off. I'll let JP Morgan, Citigroup, Lululemon last week pre-announced, went straight down. So usually the first tranche of earnings, I look for what the tell is. Are they on the low for the year? And then what are they going to do? How can they disappoint? They're already factoring in bad earnings. But on the other hand, you have a lot of them, because we've had a massive rally since late October, are near their highs. So here you go. Let's just look, because I have time to look. Earnings Friday morning. BlackRock. Did it rally into earnings? No. What's it doing now? Nothing. Pretty cool. United Health. Yeah, heck yeah, rallied into earnings, and it got nailed. So Delta rallied into earnings. So Mike, there you go. There's a good probability for you. Now, the best way I play these, though, is I don't like playing them overnight. I like playing them then the next day, especially if I see a cross like I did in JP Morgan. There. All those crosses. So even though you could have played it overnight, you were gagging after the opening. So Bank America, well, it did nothing before earnings, and now it went to the path of least support. So next week should be real interesting because we have Goldman Sachs. Is Goldman Sachs near its high for the year? It sure is. That has earnings next week. So you have a number of them that are near their yearly highs. And like I said, that doesn't mean to play a spread under the market. It means to look for reversal patterns on the downside during the day, like you saw in JP Morgan. So let me give you some examples of some of the stocks that are coming out next week. So you have Morgan Stanley. It's already going down. Yeah, they're trying to factor in what just happened to JP Morgan. So how about Schwab? Already going down. How about, remember, here's one of the first software stocks that's coming out. It's already near its low. So this is a real interesting way to look for reversal patterns. So if it's near its high on earnings, you look for a bearish reversal pattern. If it's near its low, you look for bullish reversal patterns. And you look at the companion stocks. So Delta, you look at UAL and so on. So the real ones, when they start coming to the software stocks, they don't really show up until the week of January 23rd. Just to let you know, the Netflix of the world. Then you get the chips with the Texas Instruments. So you get Kimberly-Clark. I've gotten wiped in that stock before, that's for sure. But here you go. Is that good enough? That nothing that happens with earnings is going to make it go up. That's a push. Up here, that's different. So hope that, Mike, but you're looking at the same thing I'm looking at. Like I said, I'm not doing anything in here. And I just can't stress enough. I did a class on short selling. Yep. And I warned everybody I was probably timing the bottom. But the key in there is when you're ultra short term selling, you have to respect support zones. You just have to. So there are three things I look at. Well, there are a lot of things, but one of them is support, the 15-minute MACD. This is for day trading, and other indexes. So I showed that, 20 minutes ago. And that's why I didn't touch anything on the downside. Maybe later, but not now. So at the moment, all I can tell you is if the things that made the markets go down earlier, which to me is the banks and also would be the bonds and would be the Russell. So if the Russell comes back, it's just really tough when you're at that support. If this was a big gap underneath, that's a different situation, but we don't have that. Yeah, and I'll tell you, I've traded IBM. Well, I was in that pit for 8 years, but I never had a trading position into earnings. Just to let you know, never had a position into earnings because there's more than enough to do after earnings. In fact, before I leave, let's go look. Let's take another one. So let's take IBM. Well, here you go. Closed on its low. It's yearly low. And where's it going to go? The bar is really low. So let's take one that had a reversal, though. Like, let's see. That one was a push. It wasn't a new high, new low. Let's take this one right there, April 20th. After the close, I'm sure. All right, it was after the close on the 19th. Let's just see if there was enough of a reversal pattern to be able to make money. Jeez. That's a little rough. Let me just tell you, when you see that, that's brutal. Now, the only way I'd see to do it is to go to pre-market and see if there was something in there. So let's go to pre-market. I don't know if it shows on demand. I guess we'll see. But in answer to your question about what I think the market's going to do at the close, if the things that made it go down today don't bounce, then I think markets are going to close near their low. And that means the transports, the Russell, the bonds, and the banks. Yeah, this isn't going to work, unfortunately. So bonds unchanged. They haven't provided a lift. Dow on its low, hasn't, and so on. The only thing holding up the market was that support because the banks aren't going up. So dollar not going down. So that's where I am at the moment. Mike, I was able to figure this out. Here you go. Here's IBM on April 20th. So you see what it did on the after the close on the 19th. Look at your backstop on the opening. That's amazing. So that pre-market from the night before was huge resistance. Also, it was huge resistance on a non-pre-market right there. We can really use that to our advantage. I'm going to put a 4-hour on the left. Yeah, look at that. Really, really cool. You can definitely use that as a backstop. So thanks for being with me. Everybody have a good 3-day weekend, and I will talk to you next week. I hope you found this enlightening. So take care.